Afternoon, everybody. How are we all doing? All good? 28 people. Not bad. It's early. I was a bit late posting it out today. David, $5 tip. Thank you very much. Screw the trolls. You're the best. I like you. Thank you, David. It's very, very nice of you. I shall spend that at the cinema tomorrow. I'm going to see Civil War. That will pay for probably that much popcorn. Maybe that much. Thank you very much for that. Very much appreciated. Afternoon, Manny. Afternoon, Steve, Amy, Fletch, Emac, Paul, Monkey, Sonu. I presume it's raining where you are rather than what the other meaning of that icon you've posted is. Afternoon, Mumo. Mumo's got rockets. Put two and two together. Afternoon, Manny. Brian, just use the calendar. Oh, Forex Factory, yeah. Is anyone yet in gold? Don't know. Don't trade gold. Afternoon, Daniel. Now, Danny, Callum, how are we all doing? Yeah, so I posted a message on Discord earlier about Forex Factory, basically. Steve, thanks very much for the €10. That's very much appreciated. Thank you. That actually will pay for a whole popcorn. Just. Thank you very much. Much appreciated. The kids will be very happy. You know what? I go to the cinema, right? 2 adults, 2 children. You spend 30 quid on tickets. I spend about 50 quid at the kiosk buying popcorn, Coke, sweets, and everything else. It actually costs you more in the cinema than it costs to go to the cinema now. They make more out of popcorn than they do out of bloody tickets. It's nuts. Thank you, Mumo. Oh, it's Appreciation Day, guys. Thank you very much. Thanks, Mumo. That's very kind of you. I have no idea what that is. It's 700 KES. I don't even know what a KES is, but thank you very much. Whatever that is. I've got no idea what that is. But anyway, thank you. Very nice. Very much appreciated. Thank you for the money. I like. And David. Okay, guys. Thank you very much. I must match Steve. Hey, if I get a bidding war going, David. So right now, David's done 5. So now everybody else has to up theirs next. Let's play that game. That'll stop them. You don't have to keep tipping, guys, but thank you. It's very much appreciated, especially for the Kez. Wasn't that an eagle? Kez, back in a long time ago. Anyway, thank you very much. We'll do some analysis in a minute. It's Kenyan shillings, if I'm not mistaken, Paul says. Kenyan shillings. That's the way of saying you don't want to lose me. That's very much appreciated. Thank you. Kenyan shillings. Shillings in the UK used to be worth virtually nothing. I don't know what a shilling is, but anyway, thank you. You don't have to do that, guys. It is appreciated. And it will pay for the cinema. But anyway, analysis. So, yeah, I was posted on... we've got 8 minutes until the news. I posted on Discord earlier today about Forex Factory. Somebody contacted me about something they found on Forex Factory and then something else that they found on Forex Factory type thing. And it's like this Forex Factory site, when I was started trading a long time ago, was a godsend because it allowed me to test and find out about loads and loads and loads and loads of stuff. Thank you, Danny. Another 5 Australian dollars this time. Guys, just keep the thumbs coming in. Get more people in here. That's the best thing to do. But thank you very much. Much appreciated. I can actually afford an entire cinema trip now. That's really good. But yeah, I was just saying about these forums, yeah. There's over 70,000 threads in here, yeah? Think about this for a minute. There's 70,000 threads in Forex Factory. You go into trading systems. There's 3,000 threads in here with 44,000 posts, 11,000 posts, 146,000 posts. Yeah. You cannot absorb this information. And when you get into Forex Factory, you end up going round and round and round and round in circles for years, literally for years. I'm not joking. I've been there. I've done it. I've spent over 5 years in here trying stuff and getting absolutely nowhere. There's nothing in here that works consistently. People set up these things and they set something up which is a variation of something else they've learned with their twist on it. And what tends to happen is they'll do something, it'll work, and all of a sudden 50 people jump on it and you suddenly get a boost in thread count. And then people go, oh, that's hot at the moment. We'll go in there and have a look. What they're doing at the time works because the market conditions suit it. And then the market conditions stop suiting it and it collapses. And either one of two things happens. The thread dies down and it suddenly becomes very, very quiet until the market conditions and the market regime resuits that strategy. And then all of a sudden it starts to have a lucky run again. And then it boosts and then it drops and then it boosts and then it drops. It's exactly the same as your P&L if you were just trading with a coin. Yeah, but you get sucked in and stuck in this thing for such a long time. And that's what my system hopping videos are about. You go round and round in circles. I've tried pivot trading. Doesn't work. I've tried everything in here, but you try that, you stick with it for 3 months, you figure out it doesn't work, or somebody mentions something to you and goes, oh, I'll pop off to that one. And then you'll lose track of that one and you'll start running that one. And then you'll lose track of that one. You go and find the Williams R and you'll lose track of that. And that's all you ever do. And that's only if you're in that forum to do with trading systems. Yeah, if you suddenly start going into the discussion forums, you'll be off all over the place. People in discussion forums are trading 1 billion strategies. Not one of them's got a proven track record in anything. Yeah, it's just a distraction. When you start using this thing for what it's useful for, which is plotting what's going on in the world of finance, which is what drives this market up and down at random, that's when you start to benefit. Yeah. So just a word of warning, I put it in the Discord group because I typed it out because it's just my experience. And then I read it and thought, I wonder if people realize they're in this cycle. And you are in this cycle if you're on here. And this is where the trolls live. There are trolls in here that have been in this thing for 15 years. Since I've been trading, there's the same names coming up in here. There's a guy I just saw fly past a minute ago called Emmanuel. He's been in here since I've known it. Yeah. Troll, total troll. Where is he? There he is. He took over these. Look at how many posts there are. They take over these threads and they destroy them. Yeah. Any hope of anything working in these threads just gets destroyed by people who take them over and manipulate them. It's all about people wanting to be better than everybody else. That's what this whole thing's about. So just go somewhere else, anywhere else. They're toxic environments. News is coming out in 3 minutes. So I just want to quickly recap news from yesterday afternoon. So going back to yesterday afternoon, first rate cut in December, S&P forecasting now. So this is the US rate cut, December. We are pushed back to the very end of this year. There is only one step further back than we are now next year. Yeah. So this US rate that we thought was coming in June got pushed back to July, maybe August, then back to September, maybe October, then forecast November, maybe back to September, is now at December. Yeah. It's just getting pushed further and further and further back. The more negative news we get that drives that CPI figure either flat or up, the further that's going, which means that US dollar bearishness not coming, which does mean rallies in the stock market, potentially, but we'll see. So that was, I noticed that yesterday because it was late on in the afternoon. But we are still looking November, December time. News so far today, we've had Apple shares released, so there should be good runs on the indices this afternoon. That's in an hour's time. ECB looking for 3 rate cuts this year now. First one in June. So if we're going to go with 3 rate cuts, we'll miss July, go August, miss September, go October. So it looks like they're going to go 0.25% every other month at the moment, but we will see how fast inflation comes down. But the ECB confirming again, we're definitely doing it. but it's going to be steady. It's not going to be like that, which it was on the way up, 0.25% every month regardless. It's going to be come down, wait a bit, come down, wait a bit. So a little bit, hopefully a little bit more market structure-y, which will be good. But that all starts in June. And that's about it for this morning. Not a lot else we had. We had the PMI figures for the UK this morning, which came out as forecast. Euro unemployment, which doesn't then do much. So that's it. So we are here for non-farm payroll, which comes out in 1 minute. Unemployment rate is the thing we are looking at. So US dollar. Let's watch Euro US. Look at that. Sitting on last week's high at NFP. And US dollar yen. Yeah, we flattened here. I posted it well in the channels this morning. I got out last night. I said I was going to hold this, but it was too much money. I had to take it. I've made 13K. No, I haven't. That's a lie. 10, 14 and a bit K on this drop. On that intervention, second intervention, I couldn't. I had to take it because it pays for my yen losses, which I took here. Yeah, I took 11K loss there. Then that happened the day after. I caught that and made all of that back. So I had to take it. I want to hold it. So what I'm planning to do is if we get a pullback anywhere in here, I think I'm going to start another little short. We're not going to get an intervention move again. Loses out, sorry. Negative US. We're not going to get another intervention move, but I would like to scale back into it. So that's negative US. Quite substantial. Should have held it. Never mind. So yes, quite substantial negative move. So pound US 125. Let's just see how far this goes and how much. So our unemployment numbers will be up. Euro New Zealand also reacting. We've got some movement across the board here. So unemployment numbers will be up 3.9 on a 3.8. So it's only 0.1. That's not massive. Quite a miss on the unemployment change. So yeah, that's quite a big miss. So we're forecasting about 70K drop. We got 125K drop. So that is quite big. Earnings are also down as well. But anyway, so unemployment rate is up. That is negative, obviously, for the US dollar. Won't help the inflation bounce in any way, shape or form. So we'll see if this holds. Being non-farm payroll, obviously, you have to take it with a pinch of salt, this initial move, because all we're seeing here is a knee-jerk reaction to the number where they forecast a specific number. They've got a different number, so they're readjusting positions. Whether or not that is what the analysts want or not, or what the bank needs, is obviously what we find out in a minute. But so far, very large negative. Got a test running on that one. Okay, yeah, 150 ADR. So that's come back down into 3-week low. Sorry, 2-week low. US dollar Swiss. We've got the monthly low here as well. So this is a very strong support resistance area. So if this isn't a move, we're likely to find some buyers entering the market there on US dollar Swiss. US dollar yen, obviously, just kiss that goodbye for the rest of the month anyway. US dollar CAD running into the previous month's high. So again, anybody that's bought This breakout will be looking to add back in. Previous month high is a good level to do that. Very, very strong resistance. That's the propulsion move. So if the move is what they want to hold, we should find buyers stepping in here as well. So just don't read too much into this. It's only a 0.1% miss on unemployment, so it's not massive at all. Might not hold at all. Pound US, that's miles out the highs. We're coming into that propulsion move as well. So again, likely to be sellers sitting in that area. Same with the Euro US. Big move. Right, so those numbers basically, they are not good for the US. Obviously, it won't help inflation. If unemployment is going up, it means businesses are still cutting costs. If businesses are still cutting costs, it means that their inflation figure is going up. Their inflation figure is going up. They charge more in prices, which drives inflation up for retail, which drives up and stabilizes interest rates. So it's not long-term negative for the US, this, but it isn't going to help their case for not dropping in December. Let's just have a quick look and just see if there's chances of a rate cut now in September. Again, I don't think that's necessarily. This is we get this every time, don't we? We've had this change 2 to 3 times in a day at the moment. Absolute joke. 77 basis point in the ECB. Yeah, I know that. Okay, so we'll just watch this play out over the next half hour. We'll see if that holds, but there's a good chance that this is going to pull back in from here. So we'll see what happens, but it may not retrace. So market certainly doesn't like it, which is good. But I think that's a bit early to call that. Just because that's popped up by 0.1%, they're suddenly bringing the forecast forward on the interest rate drop. Bit too soon, I think. But we'll see what happens. Right. Let's have a look at the rest of the stuff. Pound New Zealand ADR. So you're going to find stuff moving everywhere. Non-farm payroll doesn't just affect the US dollar because when they're piling money into the US, they have to pull the money out of somewhere else to put it into the US. So you'll find all currencies are reacting all over the place, regardless of what they are, which is why we get the ADR dashboard lighting up like a Christmas tree on non-farm. It doesn't matter what it is, it'll all move. So Aussie dollar CAD 125. Yeah, big moves. Well, let's catch up on the chat. Where was I? While we're waiting for that to settle. David, leave for Prime Minister? Yeah, I could do that job. There's one going, I hear, in the UK, because the bloke's in charge at the moment is being kicked out. We had voting yesterday, and everybody's voted the other way. Because Boris Johnson's not in charge. Evening from Australia. Evening, Dallas. You're as bent as a 2-bob bit. You just wanted me to say that in an English accent, didn't you? Afternoon, Crom. Roswitha. Market's hotting up. Yep, will be. Do I have to keep my MT4 platform up and running on the VPS in order to continue running and managing positions? Yes, of course. Can't. EAs don't work if the PC's turned off. I do get asked that a lot. To me, coming from an IT programming background, it's obvious, but not obvious when you think about it, because obviously people assume that this terminal is a view of their account and whatever they do on here is pushed onto their account. It's not. It's this. So yes, you have to leave your VPS on 24/7, 365. I never turn my box off. It's there all day, every day. Aussie dollar CAD 125, which we're on. Afternoon, it's time. Afternoon, Michael. Delavar. Going to see Civil War. Yes. I'll possibly have a front row seat in a couple of months. Yes, you might do, Brian. it does look like a very good film from the trailers. And with what's going on in America at the moment, it might well just be a factual documentary that they've made ahead of time instead of after the event. Did make me laugh. I was watching the news this morning. In the UK, I can't remember where it was. There is a college or a university in the UK who are doing the same thing. They're doing a sit-in for Palestine. And in the UK, they're all camped out in tents, sitting around doing absolutely nothing. That's our version of protesting. In America, they're shooting rubber bullets out of shotguns at people. There's fireworks being thrown everywhere and mass carnage. Yeah, we're doing the same thing. It's the same protest, two different countries. What a different approach we have, eh? We sit there and go, we don't like it. You sit there and go, well, not you, but people in America, you know. Different, isn't it? Different way of life. Price of gold is just plain crazy. Gold will be collapsing, be shooting through the roof right now. On that, haven't got an account with gold. Right. But yeah, gold will be going up. At the moment, does the opposite to what the dollar does. Right, so ADRs at the moment, sorry, RSIs. There's only one RSI at the moment, which is the US dollar Swiss. That was already extended. Obviously, now it's just taken an even bigger tank. So you're stuck down below the 20 level now. So I will be taking a long on this. That's a really nice long opportunity as well. So I'll be getting in long on this at some point. No, I won't. No, I won't. Because I'm not trading the Swiss at the moment. But if you want to, there is a long opportunity there on the Swiss franc. So you got a nice 20 extension. So wait for either 5-minute reverse alert if you're using market reverse alerts strategy, or if you're using the position trader EA, obviously you'll get in on a moving average cross. You're not going to get a market reverse alert on this because the alert rectangle is up there. So the support rectangle is miles away on this. So you're not going to get an entry on 5-minute unless we get a bull candle and then make a new low. So you're going to find it quite tricky to get in on this move. And if you do get in on this, don't get greedy. Watch this level for resistance. So that propulsion gap may or may not hold on the 5. It probably won't hold on the 5. But obviously, you're in the process of potentially forming a propulsion move a la that. So that is potentially what you're going to find. But we'll wait and see what the market makes of this. At the moment, they are holding this position. So it looks like this could be a drop. We'll see. So that's your only RSI on the hourly. 4 hourly, you've got US dollar yen. That is still extended to the downside. Up to you what you do with the yen. I'm never hitting the buy button on this thing, that's for sure. I only want to be selling it. So at the moment, my plan on this, as I said, is to we're not going to get another propulsion move like this. This is obviously the interventions. So your normal market structure isn't really even going to be that. This is a news event. Yeah, this is a normal news event candlestick. So I'm looking for a pullback up into this area. Yeah. So somewhere in the region of 150 ADR to 225 ADR on today's measurements, but anywhere around there, if we can get back up into there, I will take a short on it. But if we break the second intervention high, not interested anymore, because either this intervention is holding or it's not. If it's not holding, i.e. it breaks that level, something's not right with the yen, and they're not going to be able to use intervention, are they? In which case, then this thing can go anywhere. But we are expecting a weak US dollar. We're just waiting for some kind of confirmation as to when that's going to be, which we haven't got off of FOMC this week. So anywhere up there for shorts. So I'll be very wary about trying to take a 4-hour RSI extension off of this at the moment. You're more likely to get an accumulation break or just a flag break on that move. So just look at the previous intervention. Yeah, we've looked at it multiple times, but go back and look at the previous interventions. Yeah. So that was the first one that didn't work. That was the second one. That was the second entry. We sat there for a couple of weeks and then they did that. So that's what you're expecting to come. Very big, strong sell action coming in. This is a period of 3 weeks. At any time in the next 3 weeks, if the Fed turn around and go, actually, it's doing better than we thought, this thing's going to fall out of bed. And as long as the yen have got strength, this is just not coming back. So be very wary longing it at the moment. The only other things we've got extended at the moment are Aussie dollar CAD on the 4 hour. That's extended to the upside. You can't really take anything into consideration at the moment, obviously, because we've just had a news event, but that is potentially very nice bear divergence forming there. But so there's an opportunity for a play back down into this high and then continue, but we'll see what happens. So there's not a lot really to look at all today. It's all about the news this afternoon. We've been waiting for the news to see what they make of FOMC, and it seems that they are bearish. So ADRs today, they are obviously all an opportunity. Every single one of these is an opportunity to get in to a short, but or opposite direction, depending which way it's gone. But obviously, when you're trying to mean revert news, if it is something fundamental the markets are going to get hold of and just continue the move on, these are never going to play out. So ADR hits in normal market conditions without news, fine. In news, you're taking a much higher risk than normal. New Zealand CAD is the most extended of the lot. We've had 200 ADR on that today so far. So if this move holds and they sit up here for the next hour, that's going to be your propulsion gap. You've got a nice monthly resistance coming up around about 250 ADR or so. So if you do want to take that short, obviously wait for some bear action. So you're forming an inside bar at the moment. So if you wanted to, you could take an inside bar break short. Watch that level there. But the likelihood is, if they are going to continue this US move, you're going to find something like that. So you can take a short on it if you want to. And then obviously, when you come up into that monthly high, that would be a second entry short average, and then play back into this propulsion gap. So we'll see what happens. The US obviously has had negative news, so there is a chance that might continue. And if that does continue, you're just going to get flags forming and then break up. So that is basically what we've tapped into at the moment. So the propulsion gap retest is where we are. So we know this is where they sold. This is where they added. If they're going to hold this level, this is where they're going to add into their positions. So all the longer term players who are short on this being the new lower high will be defending this area, trying to drive price back down into these lows and obviously break that low to go off down that way. However, the news is obviously negative CAD because it moves with the US. So that's your news this afternoon. We have got one more. Futures now price in 2 cuts of 25 basis points in 2024. Really? Okay. Well, if that's what the market now thinks, they think they're going to drop rates off the back of that number. It's 0.1%. Come on, it's not that big. If they reckon that's enough to bring the US dollar down for 2, so they're looking at a 50 basis. Right. This is how quick this news changes at the moment. Yeah, I just covered this morning, didn't I? The S&P now say that the first rate cut could be in December. So that would indicate a 0.25 rate cut in December being the very back end of this year, possibly one rate cut. Within 24 hours, the market is now pricing in a 0.5% drop starting in September, 3 months earlier, and dropping twice as far. That's within 24 hours. This is why this market is in such a mess. All these markets are in such a mess at the moment. The Fed and the market are changing their mind like the wind every day. There's no consistency anywhere here. We have the ECB coming out and saying we're definitely going to drop the rates in June. And then 2 minutes later, somebody else from the ECB comes out and says, probably July. But we'll have a look at the data. Make your bloody minds up, people. So yeah, as I said, don't read too much into this at the moment. The market's still absorbing this information. So we'll see what happens. But so yeah, so take this all with a little bit of a pinch of salt today, because we don't know what the market's going to make of this long term. So afternoon champagne, YV. Price of gold is just crazy at the moment. Yeah, it is. That's only because of the US dollar, though. Because obviously gold's priced in US dollar. That's why it does the inverse to what the US does. And the US has just had a negative news, so the gold will be going up. But whether that holds or not, we'll have to wait and see, won't we? David, those propulsion gaps are magnetic. Yep. Yeah. So basically, one of the guy that invented the wide range bar theory, M.A. Perry, which is what the propulsion gaps basically are based on, or propulsion candles, whatever you want to call them, big strong moves in the market are retested. That's why it's good to have them there. So if you get into a trade, any kind of mean reversion trade, for example, let's find a chart without one. So you'll find it very hard not to find a propulsion gap because that's the way it goes. I don't think I'll be able to find one to explain the point, really. But yeah, I mean, if you were to get into... I can't find one. A short here, for example, yeah. You've got a target there. And if you want to be more conservative, you've got a target there. And if you want to be more conservative, you've got a target there. If you found price went like that, yeah, all the way up to this level here, i.e. it was even all the way and there was no propulsion gaps formed, you know that the market has been entering and taking profit constantly along the way. And there is no reason to do anything but carry on doing what they're doing. When there's a propulsion gap formed, market participants are caught offside. Yeah, this is why the market likes to return to them. They're called unfinished business. There are banks and institutions caught offside and in the hole, needing to fix the hole. Yeah, and they will do their best to drive the market back to those areas, which is why they act as magnets, which is why we use them, because we need to see where the banks have been, because where they've been is where they tend to end up going back to. There's a big one, there's it filled. Yeah, it's what they do all the time. There's one big one there, there's it filled. Just the way of the world. It's just what the market does. So if you get into a trade and you think, wow, this is a lovely short, and there is no reason for the market to come back down there, don't take it. Yeah, there's plenty more fish in the sea. These, we've got 28 FX pairs to trade. There's more than one opportunity a day. So, but yeah, they are bread and butter. I'm just running some tests at the moment. Let me just quickly see. I'm out of the DAX. Yeah, I'm not going to trade that this afternoon. So I'm not going to trade indices this afternoon at all. When you've had that much volume coming through, which you tend to get on non-farm before market open, the market open can be quite quiet. Saying that, though, it hasn't actually done ADR yet today. Look. We're also coming up to a big round number on the NASDAQ, 1800. That might be a nice short if we can get up there today. So, yeah, I'm probably not going to bother with the indices this afternoon because they're unlikely to have a lot of volume, I think. Friday afternoon, market's put its orders in. So I'm not going to bother with that this afternoon anyway. The other thing I was going to say about was this RSI2 strategy that I've been testing. So I've done more back testing. Let me just open Strategy Quant a sec and I'll show you. So this this is a 4-year test basically on every FX pair apart from yens. So I've included the Swiss in here for the minute, which I haven't done a full analysis on it, but I think it probably cancels itself out. So there is an argument for not including the Swiss in the strategy as well. Just because when it has a run on safe havens, it tends to just hemorrhage cash. So the portfolio did very, very well of all the currencies. So you can see that's the equity curve for all FX pairs using the RSI2 strategy. So it's exactly the same as my H1M5 mean reversion. It's just using RSI2, H4, and M15 entries. But it's using a 75% scale out when trades go 1 ADR against us. So it looks really, really good. But what I've plotted in the background here is the S&P 500 and ATR, or rather ADR. So this is ADR 14. I can't change it to ADR 10, I don't think. So you can see there's a direct correlation with the bear market and the strategy. Yeah. So it did not perform well in a bear volatile market. So from when we entered that December, when we entered bear volatile, it didn't make money until we got back out in August. So that entire 6-month bear volatile run that we had, which is now obviously looking like it's back over, but not quite accelerated. You know, you see 80. This is the interesting thing. Look at ATR during the bull market. Look at ATR during the bear volatile market. Yeah, definite step up, which is why we call it bear volatile, because it's more volatile than a bull market. And now look at ATR, down below the previous bull run. So this, I'm not convinced this is it yet. So what I've looked at and what I've done analysis on here is to how this strategy, because it's an RSI2 strategy and it's a scalping strategy. Yeah, it's scalping volatility. My expectation was here it would perform very well, because what have we got? A volatile market. But what happened in this, actually, if you think about it, was moves were twice as big, meaning losses were twice as big. Yeah. So in a volatile expanding ADR, ATR scenario, this doesn't do very well, this strategy. And what I'm looking for at the moment is a strategy to put alongside what I currently do that can be more intraday scalpy based. What have we got at the moment? Contracted volatility. Yeah. So it should do well at the moment. What I'm worried about is when we get these interest rate drops start, that volatility will pick up and the strategy will start to fail. So what I've done is adapted the strategy. And don't forget, for those that weren't here, what this is doing is it's basically very simply, I'll probably explain it on the chart better. Don't want to minimize that because otherwise I'll forget it's running. So what all I'm doing, or rather the strategy is doing, is it's taking extensions or taking trades on mean reversion when we get extended on the 2 RSI, yeah, on the 4-hour chart. So it's taking these big extensions here, yeah, and it's getting out if price moves half an ADR in our direction, or if we need to take multiple trades scaling in half an ADR apart, it gets out a quarter of an ADR. So basically the idea is we get extended, we get in, if it works, we get out with half an ADR profit. If we get in and it doesn't work, we scale in, average in, and we get out with a quarter of an ADR profit. Yeah. So If it works, we take more than if it doesn't work, we take less because we just want to be out because we're wrong. So that's the strategy and that I've tested. What it seems to me, having tested on other time periods as well, is that that isn't necessarily the best thing to do. What this needs is a higher risk reward ratio. So I've run another set of tests here using the hourly time frame to get in, and I've extended the RSI out to 90-10. I was using previously 70-30, 75-25. Yeah. So what I've noticed after analyzing this further is if you get to that 75-25 level, a lot of the time you will get to the 90-10. Yeah. When you get to the 90-10, the probabilities and the odds of that snapback exponentially increase. The strike rate goes up, obviously. But if you look at this, each of these is a week. This is just the pound US, sorry, this is just the Euro Swiss. Doesn't matter what currency it is. Look how many opportunities there are every week. You're not short of opportunity with this strategy. Yeah, you will have at least a couple of entries a week on this. So we don't need multiple entries. We need higher probability entries at the minute. So that's what I'm looking at, and I've changed it so that it runs on the 4 hour, but it uses the hourly time frame as an entry. Theory being is when we've got that 4 hour extension, we're up here. We wait for a big, strong 1 hour push before we get back in. And that is the equivalent to seeing the RSI drop. Yeah. So it's the same sort of signal. It's just using a higher time frame, which smooths out that profit curve a lot more. So I got really itchy nose for some reason. So this is the first batch of results that I've got back from that. And I wanted to find out whether it's better to scale in half an ADR, 1 ADR, 2 ADR. I wanted to find out whether it's better to take a 1%, 0.5%, 2% target on single entries. And if we have to get into multiples, what should our profit targets be? And when should we start doing drawdown control? I.e., when should we put our stop losses in place? Yeah. So should it be half? I've actually gone from 3/4 of an ADR up to 2 ADR. If it goes beyond 2 ADR, it's wrong. Yeah. But don't forget we're scaling in as well. So we will have multiple positions on if we use that level of stop. So this works an awful lot better, produces much more alpha. Yeah, much more. Depending on the pair, anything from 2 to 3 times the return that trading on the 15-minute using the 75-25 RSI2 does. But the drawdown is unaffected. Yeah, so if you look at the drawdown numbers here, which you can't see because the screen's probably far too small, they range from sort of 12% to 17%. Maximum is 20%. Yeah. If you look at the previous test I did the other day on H4 M15, those drawdowns are the same, somewhere between, this one goes from 14 to 20, but the profitability ranges from a lot less. Yeah, so it seems, and this would kind of fall in line with what Larry Connor's findings were, because he was trading on the hourly time, the daily time frames. You're better off waiting for it to go completely parabolic and then enter as it starts to drop, rather than just getting in for getting in's sake. So the hourly time frame gives you that much more confirmation of a drop while it's still extended. So this thing comes up and down very, very quickly. So for you to get in on an hourly time frame after you've been extended on the 4 hourly, that drop's got to be fast. So it's kind of like the move we've just seen today. As a prime example, I'll stick it down on the RSI too. You can see. Yeah, so we're up here at 100. Yeah, it doesn't get any higher than that. It's extended beyond extended's belief. So if you drop down onto the hourly time frame and you wait for that initial entry signal to come in, what you tend to do is you either have one or two things happen, that or that. We know that. If that happens, we take somewhere between 2 to 3% out the market. If that happens, we get out with round about 1 to 1.5. So it's roughly a 2R strategy. but its strike rate is phenomenal, especially with scaling in. When you turn this into this normal stop loss strategy into a position trading strategy, i.e., you give it 2 to 3 positions instead of 1, normally better, like better than his results. So yeah, I'm still back testing it. The initial results, obviously, as you can see, that was my initial testing. I've improved upon this already. And this is obviously system parameter permutation tested with 32 different variations on every single Forex pair, picking one at random, then running it across all 28 pairs, and it still does that. So it's robust as you can get, pretty much. And it survived the bear market. One thing I haven't tested it over, obviously, is COVID. I doubt very, very much whether anything would survive. If it's a mean reversion strategy and the market does this, it's not going to survive. Nothing's going to survive. You stop trading in pandemics. The financial crash of 2018 as well, I haven't tested it through that. That was a fairly substantial drop, 2018. So I will be testing that period as well. And it needs to kind of survive the financial crisis because that was much slower but sustained. So, you know, the pandemic, within a week, everybody knew something was catastrophically wrong. During the 2018, after a few weeks, people were like, what's going on? Yeah, you didn't get a chance to react there. Pandemic, you did. So I'll do some more testing on it. But this is all just with the position trader EA as well. So it's something you can just roll out the set file and use straight away, which is great because there's nothing more to be done. I do also want to test a different exit strategy because I have noticed in visual backtesting, that it can quite often get into some nice profit and then collapses on a news event. So there will be points in time where, as a human being, you'll be watching it and going, there's news coming up this evening, I need to take that. So that equity curve I've just shown is full automated stupidity. Yeah, if you put a human being in charge that knows the FOMC or the non-farm payroll is about to kick in and you're sitting in 1.6% of profit and your requirement is 2, taking that. Yeah, so there's a lot of human enhancements, if you like, that I think you would, when you watch it backtesting, you'd be like, why didn't it get out there? It's on a massive winning streak and it should have taken it. So, you know, there's improvements to be made. But anyway, I'll let you know, I've got much more testing to do on it, but I'm struggling to break it, which is nice. Yeah, it's just making very good money across the board. This test I've just done here as well is also, this run I've done here is during the financial crisis and it made all this money. I'm just running it now post-pandemic, which is what this test is. That's 399 tests done so far. Out of those 399 permutations, we have 386 profitable. Yeah, so there's been so far 13 runs which aren't profitable out of 400. So 400 system parameter permutations. There's only 13 of them that don't work. It's not a good number, is it, 13? But anyway, we'll hopefully get 14 if you're superstitious. But yeah, you can see they're all profit. So robustness testing wise, it works on all currencies. It works over multiple time periods and it works on multiple time frames, i.e. you can just basically get in however the hell you like. And there's a massive probability of making money, but it is long term. And it does, as you can see, have dips. And if you look at each individual currency on an individual basis, yeah, there's a lot of stagnation in there. If I turn stagnation on, yeah, so 297 days, Aussie dollar CAD didn't make money. That's pretty much a year, didn't make money. But while Aussie dollar CAD wasn't making money in that period, get Aussie New Zealand for a minute, Aussie US was making money. but then it stagnated for 200 days then. So while that was stagnating, CAD Swiss was making money, but then CAD Swiss started to stagnate while Euro Odd was also stagnating. Pick another currency. Pound New Zealand was making money towards the back end of it. Yeah, so you can see all these stagnation periods are in different places, meaning that the overall portfolio has a consistent equity curve. But there was that period there for 219 days, the bear volatile crash, where the strategy didn't make money. It lost and recovered the money, but it didn't lose money. Yeah. So you didn't get paid there, which is why it's important to have multiple strategies, because if this one's not paying you, something else will be. The bear volatile opening range breakout or stock index hedge strategy would have been killing it because you've been getting 5R, 7R runs on it. This wouldn't. Yeah. So this is why it's important to have strategies running, ideally. Or be manual trading, in which case then you can make your own minds up about when you get in, can't you? But that's not the point of EA development, is it? So yeah, it's interesting, but I will be working further on it and come up with some news. Sorry, this question is related to non-farm payroll, but will your EA price action work on the position trader EA? I don't understand the question, Jose, even. Will your EA price action work with the position trader EA? Don't know. The price action toolkit is just I think you're talking about the price action toolkit. That's a different EA. But in theory, if you wanted the position trader EA to take over the trades you took in the price action toolkit, yes, because you just set the same magic number and then this one will start to manage the other one. If that was what the question was. Lovely ORB yesterday in the US. Yeah. Yeah, nice clean break yesterday. I didn't make money yesterday on the S&P. I got hedged on that. Actually, I took a break even on that yesterday. So yeah, the other two I made money on. The S&P I broke even on. Couldn't get out of it. Although if I'd have left it, it would have. Didn't. Obviously. Does this mean you'll be adding an ADR or end of day time exit criteria to the position trader EA? There is already an ADR exit. It's the same. ADR exit is the same as this. Look, so if you're risking, let's say you risked 1% over 1 ADR. If you want to exit at 1 ADR, you set that to 1 because you're risking 1% over 1 ADR. If you're making 1% over 1 ADR, that's an ADR exit, isn't it? So this is an equivalent to that. But time-based, I will test it. I'll need to code in a time-based exit. But again, if you watch it running, which I can't really show you because I've not got it. I've got it running. But if you watch it running, you'll find instances where you will see at end of day, this week, at end of day, you will find that the position will be in profit. So for example, here, let's say it got in long there, and it got in long there, or something, and it got up to there. The exit criteria was there, whatever it was. You saw it there. End of that day, it was in profit. The next day, it was back to a break even. There's a lot of instances you'll find where that is not far away from that. Let's say, for example, you had a 2% exit target and it was at 1.6 at the end of the day. Any normal human being would take that money. Yeah, because the odds of the next day being bull or bear are 50-50. If it's bear, you lose. If it's bull, you make an extra 0.4%. Whoop-de-doo. So there's a lot of instances like that where you would benefit from that. There are also, on the other side of the coin, instances where you get to end of day here. So there's your first entry, there's your second entry, your average price is there. That's end of day close. And what it does is it closes out for you there because you've said close me out at end of day and profit. And it takes that 0.15%. The following day, you could have taken 1.6%. So there's pluses and minuses for both using end of day exit, because end of day exit is dumb. It's like end of day close. Well, I don't want to close there. So you can then introduce another variable into your strategy, which makes it less robust, which is if profit is above X, close me out. But then what do you choose as X? So then you have another variable to introduce into your strategy, which gives you another X thousand permutations, which complicates the strategy further. So the less, this is why all my system parameter permutation tests very rarely have more than 3 to 4 variables, because every time you add a new variable in there, you are multiplying that variable by that, and that. So if that has 4, that has 4, that has 6, and that has 5, multiply all those together and then add however many variable permutations you've got there. Suddenly you jump from having, in this case, 576 parameter permutations. If I was to add in just a 1 and 0 there, a true or false, immediately I've now got over 1,000 parameter permutations. If I introduce 4 variations on that variable, i.e., let's see what end of day close is. If it's a quarter, a half, 1 or 1.5% in profit, I'm increasing that to 4,000 plus variations and up from there. The more variations there are, the more difficult it is to pick something. Because if you've got 5,000 variations on a strategy that are all profitable, which one do you pick? Yeah, and you end up curve fitting, which never works, does it? So you've got to be a bit careful. It kind of needs to be a yes or a no. Is it profitable end of day? Yes. Take the money, run. Pound New Zealand 125 ADR. Good mean reversion opportunity. I'll be taking that one. By the way, I've moved down to the 5-minute time frame on my VPS again, rather than 15. So I'll be getting in on the next reversal alert, basically, long on Pound New Zealand. So that's H1M5 mean reversion. Oh, please select. I've got too much on my chart. I just want to select that moving average. Thank you. Sorry, could you go over the strategy again? Right, yeah. So what you've just said is kind of right, AZ. I'm not sure yet on the strategies, which is why I'm running permutation tests on it. Yeah. So the idea is when the 4-hour RSI 2 is extended above X, X is 70, 80, 90, 95, 100, whatever X is, yeah, you take your first short position. When on the lower time frame, hourly, 15-minute, 5-minute, price starts to drop. I'm using the 9MA as a cross to signal that drop, yeah? So it's the same as H1M5. We're using H4, whatever. Yeah. And we're using the 2 RSI, not the 21. Yeah. It's fast, really fast. It's a scalp. If price, when you get in short, drives against you by an amount of distance, 1 ADR, 2 ADR, 1.5 ADR, some kind of distance, you shut the position. Dead. It's wrong. It's a stop loss. Yeah. So the way you do that with a position trader EA is you set in drawdown control settings, you set that to true. The percent of account for a single trade, you set to 1, for example. 1%. So if I'm risking 1% over 1 ADR, when the trade gets to 1% in drawdown, it's 1 ADR against me. I close 100% of that trade. Shut. It's equivalent to a stop loss. You could shut 75% of it. You could wait 1.5 ADR. And I'm risking 1%. So if you put in there 0.5%, you would need to adjust that down to 0.5. Because whatever you put in here is 1 ADR. So if you want to get out at 1 ADR against you, you would put the same amount in there. If you want to get out at 2 ADR against you, you would double it. And then you decide how much you want to shut out, all of it or 3/4. I've only tested all and 3/4. Yeah. We are also scaling in. So you've taken your first entry, short. Price either then goes in your favor by whatever, half an ADR, 1 ADR. Again, these are all variables. These are all system parameter permutations. You can test all of them. So you pick a distance to get out at. If it doesn't work, let's say you've used 2 ADR as your stop loss, right? Or your get out point. If price then pushes against you, you take a second entry a distance away. That is half an ADR, 1 ADR, 3/4 an ADR. Same as usual. We're scaling into the position as it goes against us. And then it will come down and you get out at a profit target. Yeah. If it pushes up further and you've got, say, half an ADR, you can scale in again and take 3 positions short. But if it pushes any further, that one there gets shut. So you're left with 2 positions. Your average is there. You're looking for a drop, which you get out of profit. So it's exactly the same position trading strategies that I trade. H1, M5 mean reversion, H4, M15. It's just push. We're getting in on the mean reversions. Yeah. But because this is a scalping strategy, you kind of need to try and get in fairly quick and get out fairly quick. But it seems to me that actually you're better off going with a higher risk reward. So I just got to quickly shut some stuff over here. My testing on this particular test here shows that it's better. So I've tested, this column here is ADR distance. Yeah. So this is the ADR scaling. So the distance between trades, the additional distance. This is a target for one trade. So if you've got one trade on, should I target half an ADR or 2 ADR? Or in between, 1 ADR, 1.5. With this one, if I've got multiple trades on, should I be targeting half an ADR 3? So this is where, with prices pushed, we're getting in. It didn't work out. We take a second entry. We scale in. Should I be getting out with half an ADR of profit, or should I go for the big one and assume this is going to turn into an M pattern reversal? Yeah. And this one here is drawdown start trigger. So should I start to close? And it says drawdown start. This is 100%. We're closing all of it. So this is close. So should I close my position when price has moved against me by 3/4 of an ADR, 1 ADR, 1.25, 1.5, 1 3/4, or 2? Yeah. So those are all the system parameter permutations I've tested. So every combination of every single one of those possible is tested, which is 576 variations. It's very clear, because there's only half of them at work, what you shouldn't be doing. And what you shouldn't be doing is closing your position out anything less than 1.5, 1.25 ADR. So you need to give the trade time to breathe. You've got to give it at least 1.25 ADR, if not more. If you give it 1.5 ADR and you get in, get out when it drops half an ADR. Sorry, when it drops 1 ADR. Yeah. Get out when it drops 3 ADR if you've got multiple positions on. That will generate you 46K with 12K a drawdown. Yeah. So return on drawdown is 3.82. Yeah. And this is all the variations I've tested. There is no right or wrong with any of them. They all work. They all are profitable. It doesn't matter. And this is what system parameter permutation testing is all about. Because you're never going to get what you have here ever again, are you? The RSI is never going to hit that level where price has done that, where the fundamentals are that, when it's at that particular time of day, when you've got a reversal on the lower time frame that forms this particular pattern, and tomorrow is non-farm payroll or isn't non-farm payroll. The conditions that produce these results are never, ever, ever happening again in the future. So what robustness testing is showing you is it doesn't matter if you use half or 1. It doesn't matter if you target that, or you go for 1.5 or 3 ADR as your target. And it doesn't matter if you start getting out after 1.5 or 1.75 or 1.25 down there somewhere. They all work. That's the whole point of it. Just get in. Some of them will, some of them won't. You have no control over that. But if you do some of this, any of this, over all pairs, over 4 years, that's what happens. And every system parameter permutation test has an equity curve that looks similar, but not the same. It's just a case of, yeah, if it pushes hard, there's a good chance it will do that, which is all I've ever been saying for the last 5 years, isn't it? After it's pushed, the banks need to take profit. This is a very quick version of what I do, because at the moment, this market is spending 99% of its time doing this. And if it's going to do that, the RSI on the hourly is just not getting there. But the RSI on the 4 hourly is giving you 2 to 3 signals a week. However, because it's 2 to 3 signals a week, it's not reliable. So you need a stop loss, because if you get in on the RSI 2 there, you're dead. Not dead, but if you look at this one here, let's pick one. I'm just going to try and find what's rangy at the moment. New Zealand. So the RSI 2 entry there, look, above the 90. Yeah, you're in there. Right, now look at all of this. And this is my argument for end of day exit. At the moment, that is. That's where you got in. 90 is that one. So that's where you got in. It then pushed against you by half an ADR. And then it dropped by probably 1 ADR in total on that day. And then it dropped by a further whatever. So that movement there from your entry to there is half an ADR. Take it. Yeah, because you're very close to getting a signal to going long, which the next day you got. So you find that the market is constantly saying, get short. And you do. And they're saying, get long. So you have to get out your short to get long. And then it goes, right, get out your long, get short. It's an always in strategy. When the market is doing this, you're always trading in one direction or the other. If you're wrong on the first time, the chances are, because this is already extended, it flattens out here, look, into 0 when it's squeezing from there to there. It went flatline, like we've got in the US pairs at the moment. Look at a US pair. You'll be flatlined. Look, flatlined. Yeah, your initial entry to get in was there. Yeah, and this one in this case has moved less than 2 ADR, so about 1.6 ADR. So that first entry long didn't work out. You took a second entry long somewhere in here in price action when you got a little bit of a push. Yeah, that hasn't worked out either. You may have got another one on there, but you'll probably be shutting that one, taking that one, averages there. When it pulls back on this leg, that's where you take a 1 to 3% profit. You've taken a 1% loss there. If you take a 1% profit there, you don't lose any money. You don't make any money. But all the time this is happening on 1 or 2 pairs, the others won't be and they will be generating alpha. Because we only squeeze on certain things at certain times. Nothing ever squeezes at the same time. You can't, because if something is squeezing, to make that squeeze, you have to be taking money out of other things to put it into that, which means those other things go sideways a lot of the time. Yeah, if you're concentrating on the US dollar and the yen all the time, the Aussie dollar CAD aren't doing anything because everybody's focusing on the US dollar yen. So the Aussie dollar CAD's doing that, generating alpha, while the other one's squeezing and losing your money. Yeah. So if you put that into a portfolio of all FX pairs at the same time, that's where you get the equity curve. So which one is right to use? Don't know. The way that I pick is I look for confluence. So I tend to pick one that I like roughly a decent drawdown on, not the highest return, but fairly okay. And I will look at what those settings are. And then I will find those exact settings using a filter in all the other pairs. So if I switch over, you can't see, but there's all the pairs down there. Look. If I switch over to that pair, I will look for the same settings. Did that generate decent results and was the drawdown okay? Brilliant. What about on the euro pound? Was that good? Yeah, excellent. What about US dollar CAD? Yeah, excellent. There will be always 5 or 6 pairs or 3 or 4 pairs, which it's not anywhere near as good. And that is where you get dips. Nothing you can do about it. It's not all going to work all the time. So that's all you can do. And this is what building systems and strategies is about. It's finding stuff that you can work across all instruments. If you have one instrument that generates profit with one setting, that's curve fit. That will never happen again. This is why all the EAs are out there. You see on all these signals on the marketplace, which last for a week. They've backtested and built a system, and they spent hours and days and weeks and months building this system, getting really excited, and all of a sudden they put it live and it goes and collapses. Like, why? Well, because you picked the best possible settings over a period of history that's never going to repeat itself. You've picked randomness and put it into randomness. It's going to create randomness. Yeah, you need something that works consistently with various different settings, because you're never going to get the right entry every time. Yeah, your broker will cause variations, spread will cause variations, slippage will cause variations. So if you added half an ADR or one ADR or 1.5 ADR and it still made money, you could get half an ADR slippage and still be profitable. Never going to happen, is it? But those are the extremes you deal with, isn't it? So yeah, so I don't know what the best settings are to answer that question in a very long-winded way. But at the moment, it doesn't seem to make an awful lot of difference. But I'm going to run these tests further, and I'm just going to pick something, and then I'm going to run it on a small account to see what it does, and I'm going to manually monitor. So I'm going to decide whether or not to close end of day or not. And I probably won't use a targeting system. So I will just open up my P&L and, look at my P&L and say, right, I'll have that, and vice versa, so just do the usual stuff. That's coming down to a beautiful support bounce potential, that pound New Zealand. Look. Previous propulsion. So accumulation, break, add, extended. I'll be getting in that when we get a reversal. Yeah, we'll see what happens, but yeah, it looks good. Can you use the EA solely for controlling drawdown? Yeah. If you use the same magic number, you're talking about the Price Action Toolkit. Sorry, the Position Trader EA. Yeah. It all works on magic numbers. So if you have another EA take a trade, just use the same magic number and it'll work. It will take over those trades. Does anyone know of any position siders for futures market? You don't need them for futures market because every contract has a fixed value. So one full-size contract on the S&P 500 is 11.50 or 12.50 or whatever it is. E-minis are $2.50 per contract. So if you want to risk 5 per tick or per movement, you do 2 contracts. This is why futures is so difficult. It's very easy to calculate the sizing on it because it is fixed, but you are forced into taking a specific risk because you can't vary it. Will you make the set file available for the new strategy? You don't need me to do that. Just literally, really difficult to see because I can't enlarge this. But all I'm using is 1% risk over 1 ADR. Yeah. All the trades are 1 lot multiplier. There's no, I haven't tested multiplication at all yet. I mean, that's another thing to test. My tests have been based on half an ADR of movement because I'm risking on 1 ADR. So to be able to scale in, I need to get in before that one gets out, obviously. So whatever your distance between trades is, it needs to be less than an ADR of movement. Single trade target, I've tested it with 0.5%, but it seems to me that you want a 1 there because you want at least a 1-to-1 risk reward ratio because we are using a stop here, remember? Much as I hate it, it's kind of scaling out, isn't it, of the position. Your multi-trade target, anything from 1 to 3. Yeah. Drawdown control set to true, and the percentage to close 100%, or you can use 75%. Again, they both seem to work, but in a big drop where you tend to get a lovely little equity curve that goes like that, which happens on, you know, things like the financial crisis 2018. Can't avoid it. It's there. It happened. You're in it. Deal with it. Yeah, it's going to hurt. Same as everybody else that was using stop losses and went long continuously thinking, Christ, this thing's got to stop at some point. Yeah, that's what it's doing. It's mean reverting something that's not going to stop because the banks are collapsing. You can't do anything about it. You either stop after a period of time and go, hang on a minute, this ain't working, or you carry on and you get hurt. You know, that's it. So your exit is either 100 or 75%, and percent of account to start drawdown control is the same as that. Whatever your risk is, 1% in this case, when you get 1% in drawdown, you close 100% of the position. If you want to use 2 ADR of distance or 2% loss, you set that to 2. I personally think you want 1.5 to 2 in there and 1 in there, because that is risking 1 ADR, and we are going to get out if it goes more than 1.5 to 2 ADR against us. So you've got to give it room to breathe. Yeah. RSI is relative strength. It means there's a strong move against the market in this case. So you are getting in front of a steam train, which is still moving. So yes, we are getting in when we see some signs of strength on that lower time frame, but the steam train is coming. Yeah. This pound New Zealand is a beautiful long opportunity, but you are hoping the train breaks soon. If it doesn't, you're squashed. So you've got to give it some room to slow down, overshoot, and go back. So this is where your drawdown control comes in. No aggressive drawdown control. And your RSI is, I'm testing 4-hour, M5, M15, and H1. Again, they all seem to work with varying degrees. Doesn't really matter. What we're looking at is it's got extended and it's going to pull back. How far, we don't know. So the 4-hour time frame is what I'm testing. And your RSI high and low trigger, I have tested 75-25, which is my initial testing. I am finding that 90-10 doesn't give much different results, but has a higher strike rate. So again, different permutations of these will give you different results. But at the end of the day, if it's pushed, the chances of it pulling back are high. And that's basically what we're trading, isn't it? mean reversion. That's it. Apart from that, nothing much else different. So you can set this up yourself and test it yourself. Daily time frame testing, I have done a little bit of as well. If you look at the daily, which is Larry Connor's original strategy, you still get, and this is a month, obviously, you're still getting, for example, on the 90, you got one entry there. You got one entry there. You got an entry there. Now that would have been a loser. So this is the period of time where you get those dips. Yeah. And this is the Swiss franc. And again, the testing shows the Swiss franc is not good most of the time. But you look at other pairs. I mean, Aussie US is a great example. Look. Brilliant. But you're not going to get massive moves. Yeah, this is intraday. Oh Christ, I forgot to shut. Oh no, I did. No, I shut the terminal. You just reminded me, outro. No, I've closed. I'm not trading SIH today. I'll have a look at what it's done, but I'm not trading it. How do you have two EAs running at once on one VPS? You set up two terminals, two accounts. It's not doing anything much, is it? No volume again at the open today. Well, there is some volume, but no break. As I said earlier, I'm not trading this today because there's no, it's done its move, isn't it? Market's moved. There's a good chance that we're going to rally on the NASDAQ up to 1800 today because we've had positive Apple news. So ADR 100 to 125 is the 1800 level. So I wouldn't be surprised if we test that 1800 today. So there might be a good bounce off 1800 today on the NASDAQ. Not going to trade it myself. There you go. So that test is finished. 576 runs. We've got 543 profitable. So 40, 50, 60, 70. So 32 out of 576 unprofitable. Good. The hourly is becoming my friend. And also it's so much faster to test on the hourly. But yeah, varying results, obviously, in profit, ranging from, break evens, which you're always going to get, up to 50K with 10% drawdown. Look at that. Hey, all you prop traders out there, this never drew down by more than 9.65%. And it produced 43K in alpha. Everyone that's trading props is now going, oh, never blew and made 40 grand on one currency? Don't get too excited. That's just one permutation. There's a few actually. 8.92, 7.88, 7.62, 8.17, all generating 30K plus. 9, 28K, 7%, 28K, 9%, 26K, 8%, 24. What's 4% drawdown to make 15 grand? I'll have that. So this is scaling in. Again, doesn't matter. Half an ADR, one ADR, or two ADR, doesn't matter. Still generates revenue. Single target, half an ADR. Multi-target, half an ADR, using 75% drawdown. So you close. So when you get in, if it goes against you by 0.75 ADR, you close the position. If it moves in your favor with one position or more than one position by half an ADR, you close it. So it's a negative risk to reward ratio. Drew down 4.29% and 4.3 loads. You can see there's loads of variations that did the same thing. All these are below 5% drawdown in total. All produced 15 grand. So it's not going to set the world on fire. It's not going to make you a millionaire at all. But multiply that by 28. Probably make a living out of that, couldn't you? With very minimal drawdown. This is a 50k test. Not bad. Let's get that out before I forget, because I'm bound to. So 543 out of 576 profitable. Look at the return on drawdown on that. Look, 6.6 return on drawdown. This is post-COVID, yeah. So this is pre-COVID. This is post-COVID. So this is an 8-year test on pound US dollar with 576 system parameter permutations. Bloody good, isn't it? I can see why Larry Connors liked it. But that's not daily, it's 4 hourly. Load of RSI extensions happening due to non-farm payroll. Would you be inclined to take these? Yeah. If it's so, I'll be getting into whatever is extended at the moment. So pound New Zealand looks good to me at the moment. Very nice. We've got lovely support. We got support. You got support there at a propulsion move on a breakout. And 150 ADR extension today following a 3-day drop. It's so extended. Look at it. So extended. Yeah. 50% retracement. Very likely on that. It's knackered. However, obviously, we need to wait. This is the trouble with this type of entry. One of two things is going to happen, isn't it? This candle is going to turn into one of those orphaned propulsion gaps. Yeah. So it's either going to turn into one of these. And off we go. Or it's, and this is a breakout. And this is the difference between a propulsion move at the end of a run and the propulsion move at the start of a run. And this is why I always say with these propulsion gaps, the best ones are the accumulation breakouts. When you retest an accumulation breakout, it tends to go. When you get a massive propulsion gap forming at the end of a trend, i.e. something that's been squeezing down for days on end and then gets exhausted, there's nobody left down here to take the other side of their trades. So they have to flip short and take profit on it, or flip long in this case and take profit on it. Now, we had a 1-2 day run. This is the bottom of a 3-day run. There's a strategy out there you may have heard of called the 3 down day strategy, mean reversion strategy. This is 3 down days. But if this fundamental news that we've just had on that unemployment rate of a 0.1 increase, which again, I don't think is substantial differential to make this much movement. But anyway, we'll see. If that is an overreaction, obviously you'll find yourself back up here at some point in the next 24, 48 hours, won't you? This is an A-shaped recovery. So this is basically, we looked at this one the other day, didn't we, as being a failed price discovery move potentially. So we're in accumulation at the moment, in a range, because there's no bias on this. There's no fundamental bias long or short on the pound or the New Zealand. So there's no reason why this should break out into a strong trend. So should come back into trend, shouldn't it? I have also traded with H1 RSI 5 8020. Yeah, RSI 5, RSI 2. The reason RSI 2, the reason Larry Connors used the RSI 2 on the daily is because the market moves in 3-day cycles a lot of the time, which is what all these people that have churned out all these systems and courses on are working off the back of his work. As I say, everything in this industry is recycled. So you look at Steve Mauro's 3-day push, 3 ADR push. Yeah, it's just an extension of the 3-day push thing. It's all the same stuff. But on the 4-hour chart, 8 hours is a session. So a London session, a New York session, the Asian session, 8, 16, 24, 3 sessions a day. So the idea behind the two RSI on the 4-hour is each of those RSI extensions is probably at the end of a session. At the end of a session, you quite often profit take a proportion of that session. Or at the end of a session, the market will do a V-shaped recovery and the other will take over. So it's either a push ready for a pullback, or it's a pullback ready for a push. Yeah, so this is why it works. If you use 5 on an hourly, what's the significance of 5 hours worth of price action? Not really any significance. It's a number, which is fine. It's random, which is fine, because this is a random thing. So it may well work, it may well not. Test it. Again, this is a part of a system parameter permutation test you can run. So on the hourly RSI, test the 5, the 6, the 7, yeah, and the 4, the 3, and the 2. Run a test on all of them at the 80-20 over a period of 6 months and see if they're profitable. If they're all profitable, it doesn't matter, does it, which one you use? If only the 5 is profitable, that's curve fit. Because that 5 RSI strength that you've got on that 5-hour period, in the future, that 5-hour period will be shifted forward by 2 candles, which means it's actually a 7, but you didn't use the 7. Yeah, this is why you need system parameter permutation testing, because if you find one setting that works, if it doesn't work a few either side of each variation in your strategy, it's fit, it's curve fit, which is why all these strategies always fail, because it's the case of when it gets over here and it ticks down, that's when you take your entry. Yeah. How many times in the past has that exact thing happened at that exact price point after that exact movement before it, with the exact conditions that you've got on that day, with that news being in that bias above that moving average and that far from that moving average, having moved that ADR in a day? Too many variables. You can't ever replicate something with more than 2 or 3 variables that's happened in the past and hope for any way it's going to have any kind of indication in the future of working. It doesn't work. Not how this thing works. Have you tried different thresholds and periods of RSI depending on if going long or short? No. That's random. That's curve fitting. If you test that, exactly what I've just been saying, Daniel, if you test that and say, right, I'm going to use the 90 RSI up here, and I'm going to use, instead of the 10 RSI, I'm going to use the 25 RSI down here. What is the significance of that? Apart from, in your back test, that worked better for shorts, that worked better for longs. Over that period of time, that might have been right, but that period of time is never going to repeat itself. So these 2 numbers have got no relevance in the future. They worked well in the past. Yeah. This, from that line there to that line there, this exact price action pattern that you can see drawn by these candlesticks is never, ever, ever going to repeat itself in the future. And it has never, ever repeated itself in the past. That I've drawn there doesn't exist beyond that thing. So if you try and formulate a strategy based on this exact movement and find the perfect settings for that, it's never going to happen. People have proven this with AI already. Yeah, you can get AI to go, look at this time frame, look at every candlestick here, look at every wick, every body, and give a variance of 10% and go and find me that exact thing. Never happened. So how can you possibly expect it to happen in the future with exactly the same instance? It's not going to. So therefore, you have to use balanced movement. Price moves up and down. The distance it moves up and down, we don't know. But the strength between two currencies, we can measure, which is why I use the RSI and I don't use stochastic, CCI, MACD, and other things, because they're not working on the same thing. The MACD, which everybody seems to love so much, the moving average convergence divergence indicator, tells you what has happened in the past. It is a moving average convergence, i.e. the 21 candles before it, the 7 candles before it, and the 200 candles before it, right, are converging. Really? I know that. I can see it on the chart. How does that help you in the future? What's happened 200 candles ago on average? No relevance whatsoever. But people will find patterns in that thing and expect them to repeat themselves in the same ways you do with the MACD or the RSI. Yeah. Sometimes they will, sometimes they won't. But at least this is relative strength right now, not as in the MACD, what's been happening over the last X candles. How can that possibly help you in any way, shape or form? This is about as close to what's going on right now in the market as you can get. But even if you remove this, that will coincide with that. So if it's pushed up, you don't need this. You can see it's gone up. Get in the other way. You can see it's gone down. Get in the other way. I just have to have a number which gives me a reason to get in. But if this was sitting at 32 and my trigger was 30, but I can see there's a support here, I can press this button and go, I'll get in now. That isn't the be all and end all. It's just the fact of something having happened. But the actual measurement, the difference between using a 30 and a 32, for example, is the difference between taking a trade or not taking a trade. Every time in the future this happens, it's going to be random. Every time it's happened in the past, it's going to be random. So you can't use any of that to help you in the future. It's just not going to happen again. Which is where you come in as a trader. You've got to make your own decisions on when you do what you do. Yeah, I closed out trades last week because I was uncomfortable and pain and I had to take losses. EA would have carried on doing what it was doing. In certain cases, it would have been absolutely right to do that and it would have made an absolute fortune. But you can't do that because you don't know what's going to happen when. I knew the yen was going to come crashing down. I just didn't know when. Because if I'd have gone with the previous historical data I had, it should have come down at 145 and it should have come down at 150. It actually came down at 160. Was I right? Yes. Was I wrong with my level? Yes. Now, if I'd have done a system parameter permutation test on the past, I have a 15-point variable that if all of them I had tested worked, I would have had confidence in doing it and holding it. But I didn't have that variation because it's only happened twice. Now it's happened 3. I know there's a big variance between 145 and 160. So next time I get the US dollar yen up to 145, I'll go, I can scale into a short here between 145 and 60, and I will make sure that I got X number of positions, and by the time we get there, I'll be no more than X% in drawdown, because historically, that's happened. Could it go to 170 next time? Yeah. I've no idea. Neither of you. No one has, have they? So there's only a certain amount of faith you can have in anything that you see on the chart in the historically. Yeah, we know for a fact support and resistance works brilliantly. Look at that support. Look at that bounce. It's done it twice. What's the odds? 50-50. It's either going to do that or that. Yeah, but it's not going to do it at that price. It did it at that price. Now this one is in the middle of the two of those, but it could come down to here before it does that. It could be there before it does that. That is your system parameter permutation test that says it doesn't matter if it does it there, 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 or there, or there. They all work, which is equivalent to me using the RSI there, 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 there. They all work. Brilliant. So when it gets below that line, just buy it. And at some point in the future, historically, we know that that happens. Never going to pick that. You're never going to pick that. But if you can get somewhere around there, you've got a 50-50 chance of actually making money, haven't you? But just don't put a stop loss there, because if it goes to there, you lose. Which is what this test tells me here, is that if I use a ADR stop somewhere between 1.5 to 2, look at all this profit. All of them. Doesn't matter if I'd use 1.5 or 2. But what's not in here? 0.75. What's not in here? 1. What's not in here? There's a couple there. 1.25. So what is the best thing to use when you're trading this using a stop loss? Any stop above 1.5. But if you use lower than that, 1 or 0.75, it doesn't make money. So what do we know not to do? Still doesn't help us know what's going to happen in the future, but we know roughly what isn't a good thing to do. And all you can do is iron out the crap. You're left with the good. It doesn't mean anything, does it? Because in the future, it's not going to do the same thing. So you've got to use balanced. In my opinion, you've got to use balanced signals. So if you use a 70 there, use a 30 there. If you use an 80 there, use a 20 there. If you use a 90, use a 10. With a condition indicator, that is. With a signal indicator, it's obviously that. It's a pattern indicator, isn't it? That is a condition. And you need equilibrium. If you're in a trend, yeah, there is an argument for using different settings. If you've got a trending instrument like the S&P 500. But then you wouldn't be taking the other trade, would you? Yeah, if you've got something that you're saying is only going to go up, why would you go down? You just go up. Which again is what this strategy, Larry's strategy was. It's an S&P 500 bull-only strategy. It never took shorts. There's your propulsion gap just formed. Big sell just came in there, look. New Zealand dollar CAD 225. Just had a big push on the New Zealand there, look. There you go. So New Zealand dollar CAD, short entry. Pound New Zealand. Yeah, there's your exhaustion potentially going in, look. Limit order triggers. Have we got news at 3? I think we might have. So that was the PMIs just hit, which were negative. So again, more negative news for the US. So we'll see if the market uses this to undo that. Yeah. On your small account, when you test this, I'm assuming it will be on just one pair. No, it'll be on all pairs. All pairs. It's a portfolio. Yeah. Anything you take, any position trading strategy you use has got to be a portfolio approach. So it would be all. I would be all pairs. Wouldn't just test one. Do you not trade it on news days? SIH, not on days like non-farm, no. Because if I haven't got it open again, but if you look at historically, if you look at days where you've had a massive news spike at the open, it tends to do that a lot of the time because there's no volume. That was your volume. It opens pre-market, the volume. So there's no volume left at the open. Therefore, the opening range breakout strategy doesn't have a breakout because there's no volume. It's a momentum volume strategy, SIH and ORB. You can't trade those without volume. And after a volume hits the market off of something like non-farm payroll, there is no volume. So it's not something I do on news days. You mean 18K on the NASDAQ? Yeah. How many years was that test over? Both of these tests were 4 years. All of these tests were all 4 years as well. So I've just done a pre-market test for 4 years and a post-market test. What I mean by pre and post is COVID. So I've taken out March 2020. So to April 2020 because that was COVID. But I've let it trade through things like Liz Truss. And I've let it trade through the banking crisis. I've just taken COVID out of the equation because it distorts all results. There is nothing that survived COVID. The only things that would have survived COVID, are if you happen to have a short position on at the time the COVID spike happened and you were using some kind of trailing stop, you would have made an absolute fortune using that strategy. But it's not part of the strategy, is it? It's an outlier. You have to remove outliers because outliers aren't going to happen again. Black swans, outliers. This is why when you have these system parameter permutation tests, the top results are highly unlikely to be repeated. The bottom results are highly unlikely to be repeated. Everything in between that top 5, 10, 15%, anything that sits in here is highly likely to be repeated, which is why you run these tests. You take out the top, you take out the bottom, you pick something in the middle. It's got a very, very high probability of repeating itself. But the biggest and the worst will be affected by things like this. So if you have a strategy and all of a sudden you see one that makes 100K and then it's 75K, and then the vast majority of the rest of the results go from 50K to 35K, those two are caused by one trade that got super lucky and managed to catch the COVID spike, or managed to catch Liz Truss crashing the market, or managed to catch that non-farm payroll day that moved 300 ADR, went sideways and flew for 3 weeks because they changed the interest rates, or the Swiss franc interest rate changed without telling us. These outliers in your results of backtesting have to be removed. Yes, you would have got them, but it's one event in 4 years, which is a complete distortion of the strategy which we're working on a day by day by day basis. Stuff like this is going to happen, and it's either going to be yes or no. Yeah, look at the Swiss franc peg removal. For me, it was yes because I was short. For everybody else that was long, it was a no. Yeah, that Swiss franc peg removal, where they destroyed the Swiss franc in seconds, was not something I would go in a back test. Oh, that's a good strategy. It was a black swan event. Yeah, tsunamis, earthquakes, wars. Anything that causes a fundamental crash for days or weeks on end, you have to just stop trading or hedge your positions and wait. You can't use them in results for this sort of stuff. So the pre-post test runs from 2020 in April to March 2024. And the post-COVID test, sorry, that's the post-COVID test. The pre-COVID test runs from 2016 in February to February 2020. So we're trading up to February. We're missing out all of February, all of March, and we come back in April. So that COVID lunacy is just taking out of the results so we can see, is it robust in normal conditions? If we have another pandemic, it's not going to work. Nothing is it? Nothing works in a pandemic, as we know, because we've only ever had one. You know, these people call them the black swan events. I've had 3 of them in my entire life. I've been trading for 15 years. I've seen 3 black swans. Everybody panics. Well, what would you do in a black swan? I don't know. I've only had 3. I don't know when the next one's coming. It's coming, and I'll either be long or short, and I'll be correct or I won't be correct. I have no clue, but I can't control it. So you have to just ignore it. Yeah, it's either going to hurt or it's going to help. Probably both, because they'll probably spread the market to such an extent that even if it was going to help you, it would have stopped you out anyway, which is exactly what happened with me on the Swiss franc before my broker went bust. Anyway, we know all about that one. You're running these tests over what period? You'll just answer that one, haven't I? Would you still avoid Swiss and yen? So I'm avoiding yen at the moment. I haven't tested it. It may well be fantastic. I suspect not. So I haven't tested it on the yens. Historically, everything goes wrong on the yen at some point because the yen goes into crazy. We know it does go into crazy trends. Yeah, it doesn't stop. It's like the S&P 500 and very few strategies. This is a trend trader's dream, the yen. So if you want trend trading strategies, they're really good on the yen, but mean reversion harder. So breakout also quite difficult, but I haven't tested it on it just purely because I wanted to have stable currencies to test it on. But I will run it over the yens and see what happens. And if the portfolio and this parameter permutation tests show it as generating revenue, then yeah. Like I said, this move here that I got liquidated on Friday, I successfully traded the yen for 4 years, no problems. The last 2 interventions I made a fortune on. Yeah, this one I didn't. So is it something you shouldn't be trading? No, because it's been massively profitable for me. Gold, on the other hand, I lose on all the time, so I don't trade it. But I will get back into the yen. But right now, look at normal yen and look at yen now. Look at the range over this week on the yen. Look at the normal yen range. Yeah. I'm not interested in trading this right now. I will get back into it when it settles down. But right now, it's a loony. If it comes back up into here, though, yeah, I'm interested. But I'm not interested with normal strategy because it's crazy. But again, if you backtest the yen by all means. Take COVID out. Take the banking crisis out. Take the previous interventions out. Because your strategy is not going to work in those interventions. It may be profitable and it may be lucky, but it's an outlier, so you remove it. So you take out interventions and test the yen. So with the yen, you'd have to take out 2000 and you'd have to take out October 2022. Yeah, you'd have to take out October 2022 and you'd have to take out September 2022. That's a 4-week chart. Yeah. So I mean, to be safe, you would take out September and October, because that's when the 2 interventions happened, and every single strategy during that period will either be obliterated or produce phenomenal profit, which has happened twice in a decade. Remove it because it's not going to be part of your normal cycle. However, it did send it into a death spiral. So, this was, even if you'd have been liquidated there and got back in 2 to 3 weeks later, it has to survive this. You can't say, oh, actually, I'll remove that because it was not normal. This is months of trading. You can't remove months of trading. Or could you? Would you have made the decision like we have exactly now? Do you make the decision to remove the yen because the interventions happened? Because you're forecasting this. And if you're forecasting this, why are you not hitting the sell button like I will be? But this is not something the EA can decide. So in your testing, this is a manual trader's decision to do things, isn't it? The 13K I just made on this was nothing to do with a strategy at all. I saw the intervention, it pulled back, and I said to everybody, if this is like last time, we'll have a second one. That's why I made the money. There was no strategy involved. It was just pure luck that they did what they did. But if they didn't do what they did, I had an exit. And if they hadn't have done the second intervention and it had done that, I still would have made money on it. I just happened to get it in one spike, or rather 2 days, which is fantastic. But again, you can't include this in your trading results. That massive loss that I had there was part of my strategy, which failed. This win paid for that loss, but that's not part of my strategy. It's a lucky trade. Like my oil trade I took, which I lost $700 on. If the war had kicked off in the Middle East 2 weeks ago, I'd be sitting on 10 to 12K in profit. It's not part of a strategy. It's just a war kicks off, oil goes up. That's the trade. If you're in gold now or thinking about getting into gold now, US dollar has just dropped on the back of that number. if they're going to continue now to drop this because they think the interest rates are going to come down, you do nothing but buy gold for the next 6 months. Yeah, you could buy it now and hold it for 6 months and come back. It's not part of a strategy. You're flipping a coin, and if the fundamentals play out as the market has said today they may well do, well done. But you're not trading a strategy. You're not trading anything you can replicate with an EA. You're not trading anything that's based on historical information. You're basing it on risk reward, coin flip, fundamentals driving the market in your direction. Nothing wrong with it. It's just not a strategy, is it? It's a trade. It's an individual trade. But the Swiss is included in all these results. Yeah, the Swiss franc is in here. But you look at this, if you look at the Swiss franc results, so that is Aussie Swiss generated 56k. The Swiss CAD Swiss generated 18. Euro Swiss lost 6. So that's a negative. The pound Swiss made 6. So that cancels that one out. No, sorry, that's the pound CAD. Forget that. So that's the pound Swiss, made nothing. It made $0.04, made 4 cents, right? So that's a negative. The New Zealand dollar Swiss made 58k, and the US dollar Swiss made $500, right? This is 4 years, yeah? So that to me is a break even. That is a break even. That is a loss. That's a small positive. That's a big positive. That's a big positive. Put those all together, the Swiss franc doesn't perform particularly well, does it? Not good. It's all right. Yeah. We'll put them all together in a portfolio and we'll see. Look. Aussie Swiss, CAD Swiss, Euro Swiss, Pound Swiss, New Zealand Swiss, US Swiss. 127k. So it netted profit. But look at it month on month. So you made 36k in 2020, 17 in 2022, 30 in 2022, sorry, 2021, 2022, 42k in 2023, and break even so far this year. It's only 3 months in. All right. Aussie Swiss. So it's a loser, loser, loser. Yeah, so there is 2 big winners. So Aussie, right, so again, like this is why I talk about correlation, yeah? Look at the New Zealand dollar Swiss and look at the Aussie dollar Swiss. Made 56k, made 58k. What's the correlation between the Aussie and New Zealand? High, very high. This is why I keep saying, if you're going to go long Aussie CAD, don't go long Aussie, New Zealand CAD. It's the same thing, yeah? Pull up a chart of a New Zealand dollar and an Aussie dollar and compare the two together. Aussie dollar CAD rallying up to there into that high. New Zealand dollar CAD rallying up to there into that high. Had a big drop, sat sideways, rallying. That's one going sideways, isn't it? Because the Aussie's been stronger than New Zealand. But you get the point. They're very, very similar in their movements. So that's why these two have generated good alpha. Now, if the Aussie dollar Swiss had had a bad run, these would have had a bad run, and that would also have had a bad run. So overall, it's still worth trading, isn't it? And again, if I run this test on all the yen pairs and put all the yen pairs in and they come out with 127 grand over 4 years, it's 25 grand a year. Not the end of the world, is it? It's worth doing. But if I put them all in and they come out with a negative, you know, it's not right. And it's just the fact that the characteristics of the Japanese yen do not suit a mean reversion scalping strategy. That's fine. We know all of the yen, because all the yen will react in the same way, because it's the yen that's making the moves, not the other currency, not the cross. In this case, it's the Swiss franc that's making all the moves and not the cross. So you can create, this is the beauty of this, you can create portfolios of anything you like. You just want to test, how did the US dollar perform? Yeah, you can do that. So look at the Aussie, US, Euro, Pound, New Zealand, US CAD, US Swiss. What am I missing? Aussie, 99 grand. Yeah. So the US dollar performed worse than the Swiss franc overall. And yet we're talking, I've been talking about, maybe we shouldn't trade the Swiss franc. Facts. Swiss franc's better than the US. Like I said, the yen has made me a fortune over the last 4 or 5 years. No problem whatsoever. Yes, I've had a bad one, but I've had a bad one. So what? How many people do have a bad trade every day? Happens, doesn't it? But it's not a reason to remove it completely from your portfolio. Give it time to settle down and figure out what the hell it wants to do, then jump back in. The Swiss franc peg went from there to there in 5 minutes. Liquidated brokers all over the world, liquidated traders all over the world, liquidated banks all over the world. Yeah, people still trading it? Of course they are. After it returned to origin, everyone went, oh, look, it's just another instrument. All that's happening with the yen at the moment. But you have to take those out of your portfolio backtest. And this will show you that. So if you look at your yens, and again, beauty of this thing is you can look at each individual currency and say, show me US dollar CAD. Yeah. How did that happen? What happened to it? What was going on with the S&P at the time? Right. Why is this losing so much money here? Let's go and have a look at the market. What happened on March, April. Yeah. What happened in April to cause this? No, go and have a look on your charts. Was it a fundamental shift? If that happens, you know that in the future, if that happens, there's a possibility that the strategy will fail. You can remove those circumstances. So it's all analysis. Everything is to do with data, isn't it, in this industry? Banks and institutions employ analysts. They pay them hundreds of thousands a year to analyze fundamentals and historical information to come up with ways to extract money from movement. That's all this is. Everybody overcomplicates it by putting 15 indicators on their chart and wait for everything to line up and press the button. Flip a coin, same thing. Same thing, isn't it? How's your Aussie New Zealand going? Still in it, still sideways. It's not still in it, still sideways. Yeah, this is not going anywhere. So hopefully next week we'll start to pull back. I need 200 ADR out of it though to get just a break even, and that probably won't even be a break even. If I can get, I'll see how it goes with this week. So far this week I'm up 3.5K. If I can get, so I've done close to 18K this week. If I can get this down to sort of a couple of K in drawdown, I will shut it and get rid of it. It's the squeeze from hell. So the trouble is, as you can see, this is holding. Yeah. So this level, again, we hit it today. Yeah, market hasn't got enough confidence to buy it, but there's no reason to sell it. So we're waiting for the next news event. I'm just hoping we can get a push back and to retest this level, because that gives me an out. That's it. But again, I was on the verge of cutting it this week, especially yesterday, but I didn't. I held it and I'm in it. So not good at the moment. Again, Aussie New Zealand. Twice I've had squeezes on the Aussie New Zealand. Twice they have been way bigger and longer than I wanted them to be. Last one was back here. Can't see on the chart. It's just out of view. Yeah, that was my last long Aussie New Zealand. Yeah, I got out down here somewhere. Again, just before it gave me the out. So have I removed Aussie New Zealand? No. Have I been milking the crap out of it for the last year? Absolutely. Made back in this period, I've made back way more than that squeeze cost me. This current squeeze costing me. Will I continue to trade it? Yeah, because there's nothing wrong with it 90% of the time. But Mean reversion strategies work in trends. They do not work in parabolic trends caused by interest rate differentials, which happen to happen as I press that button. And that is why I created the bias scorecard on the website. The whole reason this thing on the website exists is because of that squeeze on the Aussie New Zealand. I said, right, I need a way of telling when these things are going to be starting. So I used all my knowledge from Anton Creel to create a bias scorecard to tell me, look, buy Aussie New Zealand. But that's, to be fair, interest rates obviously are not moving for 12 months, so this is less reliable. But this is why I created this, because of that last Aussie New Zealand squeeze I got into. I wanted a way to filter those squeezes. If something is sitting here somewhere between a 7 to a 10, you question it. At the moment, as we know, because interest rate differentials are static, i.e. they're not changing, they are different, but they're not moving, everything is range bound. We know this. This is the reason I'm looking at the RSI2 strategy, because the bloody things aren't moving. It's either parabolic squeeze or nothing. That's it, all we have in the market. That's hard to make money out of. That's hard not to get. That's hard to get out of. Yeah, it's just not conducive at the moment. It's very, 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 very hard to make money. So this is why you go off and look at other things that you can not replace, but complement existing strategy with. I haven't got an intraday scalping strategy. At the moment, it is an intraday scalper's heaven. I haven't got a strategy for it, and I need one because it's difficult at the moment to make money position trading this type of movement, which is going to change in June when the euro interest rate starts to drop and everybody starts to drop. We're going to get back into that market structure again. But you know, it's one of those things. You get stuck. Is it good for the new strategy to just have an even distribution of pairs? Yep. So yeah, you can do that. So make sure you're not exposed to more than 2 currencies. So currently on the VPS, I'm running exposure on Aussie CAD, Aussie US, Euro Odd, Euro CAD, Euro Pound, Euro US, Pound CAD, Pound New Zealand, Pound US, New Zealand CAD, New Zealand US, and US CAD. That's it. So there's no Swiss franc, no JPY, and I'm filtering out other pairs because I want to keep the exposure limited at the minute. And that's enough. But I have reduced RSI to 70-30 at the moment from 80-20 to try and get into more opportunities, but on less instruments. Because just struggling to get into stuff. But, you know, things like this at the moment working beautifully. So yeah, nothing wrong with limiting it. Limiting pairs limits exposure. But, you know, this is the, when you look at a portfolio approach to trading, which, you know, anybody in their right mind should be doing, because that is, you know, you don't know what's going to move and when. So if you don't know what's going to move and yet and when, how can you possibly pick what to trade? You know, people always come to me and say, why do you not just trade US dollar yen? Or why do you not just trade pound yen? Why don't you just trade gold? What if gold sits there, right? I've got a breakout strategy and gold sits there and goes sideways for 6 weeks. What do? Just not pay the mortgage? I need to trade what moves. If something moves, you trade it. That's the whole point of trading. You need volatility. Everyone says, don't trade around the news, you'll get killed. What is the news? Volatility. What do you need as a trader to make money? Volatility. Why don't you trade the volatility? Nuts. Yeah. Massive news event today. What am I doing? Getting into trades because the thing's moving. Yeah. If it's stuck going sideways doing that, flatlining, you can't make money, can you? It's ridiculous. If the US dollar Swiss doesn't move for weeks, I don't trade it. But the US dollar, the pound US dollar and the US dollar CAD will be going all over the place. Those are the trades you take. So all you do is you limit the number of pairs, which limits your exposure. If you limit your exposure, if one currency goes nuts, you don't go into as much drawdown as if you'd have traded all of them. Other side of the coin, you don't make as much money if they all go your direction. Yeah, if you go long 7 times on the US dollar and it drops through the floor, you're 7 times as much in trouble as you were if you traded it 3 times. However, if it goes up, you only get 3 wins instead of 7. Horses for courses, swings and roundabouts. It's all about controlling risk. But you can do what you like. There is no right and wrong. And again, as this portfolio shows, yeah, if you only traded the Aussie New Zealand over the last 4 years with this strategy, you lost 7,000. If you only traded the Aussie CAD, you made 60,000. If you only traded those two together, you made 52. Well done. If you'd have traded the whole lot, you'd have made £500,000. It's 100 grand a year. 6 figures. What's everybody striving for when they're trading? 6 figures. What do I do? 6 figures. That's what you do. You aim for. The reason you do this incredibly hard job, which is harder than a brain surgeon, is to earn 6 figures a year. Otherwise, what's the bloody point? To do that, I need to find out what's moving. Can't just trade. You know, if something goes off in a trend like that and you're a trend trader and you miss it, you've missed the opportunity. That may last for 3 months. That's not coming back. Next time you get into it, and after it's sat there for 3 months, you've missed half a year. If you only trade one instrument and you miss that, you don't get paid. What do you do then? System hop. Trade it. If it moves, trade it. If it doesn't move, your system or strategy won't give you an opportunity. Don't forget, there's 3 types of strategy: breakout, trend, or mean reversion. Yeah. Doesn't matter which strategy you trade, at some point, every instrument will either be not triggering an entry or triggering an entry. Yeah. Do you care whether it's called pound US dollar, US CAD, or pound Swiss? Does the letters make any difference to your bank balance? It's a thing, a chart. If I came in here every day and showed you a chart like this and said, there's a really good setup on this, I'd be going short. Would you give a monkey's what that is? Nothing to do with it. The fact that this thing is starting to come down, is about to give you a reversal and possibly form an M pattern reversal to go short, has got nothing to do with the name of it. Same as this time frame up here is irrelevant. You get a good short opportunity because it's broken out of that range low and it's likely to retest it and drop. Does it matter if it's on the 15-minute time frame, the hourly time frame, the 4-hour, or the daily? It's just going to take a bit longer if it's on a higher time frame. That doesn't matter. That doesn't matter. When you get in, it's either going to do that or that. What happens after you've done the entry is how you make the money. Everything else is totally irrelevant in trading. But what does everybody focus on? Finding a system or a strategy. Don't find a system or a strategy. Find a way to deal with an entry after it's been executed, because that's how you make your money and lose your money. How you get in has got nothing to do with it. Every single reversal alert has a 50-50 opportunity of working. It's either an M pattern reversal and it works, or it's an M pattern reversal that fails. That's it. That simple. Cut and dry, isn't it? You manage your risk. US dollar Swiss, good shout. What's happened? ADR reversal. Okay, so you can't get in on that. So that low was the limit order trigger. You know, like I said, it's not. I'm not doing anything but observing the past. On the bootcamp course, there's a slide on day 4 that says, and there's a whacking great pair of eyeballs, and it says, look left. Because the only thing you've got to go on if you're going to get into a trade is this, look left. You don't know right. Right's the future. Nobody knows the future. Everybody knows the past. That area there, they tried to break through after a strong push out of a range. Yeah. When they came back and retested it, they bought it. Then they bought it again. 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 We're there. What do you think might happen? I'm not being clever. I'm not being, there's no rocket science in this. They bought it the last 1, 2, 3, 4, 5, 6 times they got to this level. We're now there again. Buy it. If it works, get out. If it doesn't, buy it again and wait for it to go up. It will at some point, unless the fundamentals have shifted against you. But that's all that trade is based on. There's no system, there's no strategy, there's no logic. It's just a case of observing the past. And this is why these black lines appear on my chart. Support, resistance, propulsion indicator is there to show me where the movements are. That's all you need to know. That's all the market does, is it moves from level to level. Yeah. And until it gets to a level, it won't stop most of the time. And then it will hit that level and go, hang on a minute, this is where we sold from last time. Oh yeah, sorry, forgot about that. That's all that's going to happen when you get to this level. So where'd you get out? Propulsion. Because that's where they sold it from. If they sold it from there, what are they likely to do again? If they don't, what will they do? Break through. Then where will they head to? The last place they sold it from. If that doesn't happen, they'll go through to the next one. That's what position trading is. You don't know whether there's sellers here, here, or they're all sitting in there. But if you short it there and it's not the right spot, short it there and that's not the right spot, short it there. If you're in there, your average price is there. At some point, it will come down. Everybody that longed here is wrong. If they longed it there, they're wrong. If they're longing it here, they're wrong at the moment, but partly right. So average price is there. If they're right this time and it comes up to there, you can get out. What have you lost? Nothing. You haven't stopped out 1% of your account 3 times or twice. So you haven't got to get back 2%. All you've got to do is get back to that line. That's all you've got to do. It's like a video game, yeah? This is why I think I taught my son to trade a couple of years ago. Yeah, I think that's why he did really well. I think it's probably because he treated it like a video game. I said to him, get in when it gets to these lines. Yeah, when you see one of these big orange blocks appear, buy it, right? If it doesn't work out next time and get an orange block in it, buy it again. When it gets above the line, sell it. Wasn't hard. Came back at the end of the school holidays, profitable. He's at school. Not hard. What was that you were just showing? I don't know, Chucks. What was I showing? I don't know when you said that. I wish they put times on this comment thing because I can't see what's talking about when. Squeeze loses are the mean reversion traders stop loss. Yep, can look at it that way. Squeezes, where mean reversion traders and position traders like us lose, are where the trend traders are making their money. I lose roughly 3 times a year. Why do you think I'm a mean reversion trader? Yeah, if you're a trend trader, how many times a year are you winning? How many times a year do I win? What would I rather be? Horses for courses, it's all the same. This is why I've had so much stick over the last week, because the people that aren't doing what I'm doing are winning at the moment. Well done, you. Well done for that one time this year. You did it. Good shout about it, because for the next 7 months, I'll be shouting about it and you won't be shouting about it. That's basically the way it goes, isn't it? For everybody that wins, there has to be a loser, because it's a market. When I buy, someone sells. If I'm wrong, they win. If I'm right, they lose. That's what a marketplace is. This is all you're seeing on here is the banks fighting. The guys that wanted to buy this lost. You think they've gone, shit, let's take a 25k loss, guys? No, they've gone, oh, well, that didn't work out. We'll buy it down there. We'll wait for it to get up to there and we'll get out. No loss, no win, never mind. Next one. That's what they're doing. Yeah. If you do that, you win too. Sometimes, though, you will lose. You got me out of tunnel vision. Yeah. Now I hunt for pairs and now I hunt all pairs for opportunities. Yeah. I used to be there. This is why these guys, the guy, I can't remember his name, the one that trades pound yen only, trades pound yen. I think he might have introduced gold or something, but that guy, I can't remember his name. He owns a brokerage, makes all his money out of signing you up to his brokerage rather than selling you his courses rather than trading. But that guy, yeah, only trades 1, maybe 2 instruments. Yeah. I don't know how many streams he does where he sits there and makes no money, but I'm pretty sure there's quite a lot of them, because if the instrument that he trades does nothing, he's dead. And I'd love to see what happened during the intervention over the last 2 to 3 days. But he had a fun couple of days, but I can guarantee you without a shadow of a doubt, somehow he would have made money out of that, because it wouldn't be good for the brokerage if he lost it. After months of practice, I traded the S&P. There's nothing wrong with doing single instrument trading on things like stock indices. Now, those have a set characteristic, a set what's the word I'm trying to find? A set way of being, yeah, a personality, yeah. And if you learn their personalities, you can learn how to trade those very successfully. Price action candlestick patterns play out very regularly on those, which is why we trade the ORB and the SIH, because they have a rhythm, as Franco just said. Yeah, they have something that they do regularly because of the way that they are operated by the people that operate them. Yeah, it's like driving a car. You drive the car along at X miles an hour regularly, you get to a roundabout, you stop, you signal, you turn, da-da-da-da-da. The stock markets do that. They wake up, they wait for the bell to go, they execute the orders for the commercial banks for the day, they wait for the market to turn, and the initial cash balance goes in, and the speculators go, okay, looks like they're buying today, we'll buy there. We'll make a move and we'll stop. It's the same thing every day, which is why you get patterns repeating every day, which is why the stock markets do nothing but go up, because they're manufactured to do that, and they're engineered and have systems. So lots of people make a lot of money out of trading single instruments that have that sort of characteristic. I don't know anybody on the planet that makes a single currency work for them all the time. Because if you're a breakout trader or a trend trader on the US dollar Swiss, last week you didn't pay the bills. This week you tried to pay the bills, you failed. Now you're trying to pay the bills again. If it comes back up into here, I'm really sorry, but you're not paying the bills next week either. What do you do? Yeah. However, if you're a breakout trader and you decided to pick the US dollar yen breakout, well done. You're on your way to making a lovely load of money. But only if you're watching all of these. And this is why the dashboards exist. Where are the opportunities right now on the hourly RSI? There. Where are you not paying any attention? There, or there, or there. Yeah. What's moving at the moment? Anything green and red? Where should we go and look for some opportunities to make some money? Anything green or red? No. I only trade the New Zealand dollar Swiss. All right. Well, you just sit there and we'll go down the pub with our winnings, and you can sit there and come and join us at some point in the future when the New Zealand dollar Swiss decides to hit an RSI extension. You can't do that. You've got to trade what moves. Yeah. Volatility is what makes us money. Use it. Behavior. Yeah, that's another word for it. What RSI do you use for the new strategy? Still 21 or lower? Do you mean the RSI 2 strategy? I'll give you a clue. It isn't one. And it is included in the number that you typed on the chart, on the chat. Yeah, sorry. No, it's the that new strategy that I've just been talking about is the RSI 2. But it's still, you know, I get very excited about stuff when it makes money with a stop loss, because it very, 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 very rarely ever produces an equity curve that looks anything like that. Yeah. It's very hard to get a stop loss strategy to produce something like this. Very, very, very hard, especially not to lose a fortune when the rest of the world is. Yeah. For something to sit there over 4 years for 200 days and not make money is bloody good. And I can see why the strategy is still used today in certain formats, because it's bloody good, isn't it? But we'll see. It's certainly got legs. Pub Position Traders Convention. I'm there. When? Yep. Sounds good. Somebody posted in the group the other day. They misspelt something. I can't remember what they typed, but it was, yeah, they said, you've made us beer traders. But I think their T was broken. So they said, we love you because you've made us beer traders. Their tea was broken. But yeah, beer trade is good, but don't trade while you've had beer and don't trade the day after you've had beer. Yeah, I don't drink in the week. There's a reason for that. Makes you do really stupid things the next morning. Yeah. Again, when I came on this afternoon, we were talking about Forex Factory and how you have to avoid this thing like the plague. Half the people in here go, oh, we're just popping off for a spliff. You're smoking hash while trading. This is not your job, is it? Yeah. The Wall Street traders that did coke, they did that for a reason, to keep themselves awake because they were partying, spending all the money. But decision-making process doesn't help at all. Trust me. From a beer perspective, that is. Or wine, in my case. But anyway. Right, so I will leave you there because there's not much else to talk about. There's not much point in looking for any ADR opportunities today. The RSIs, though, at the moment, worth getting into some of those RSI extensions, I think. As you can see, this news spike, as I said, I wouldn't read too much into it. It was a 0.1. So, there's no reason for this market to be dropping the US dollar to this extent off the back of a 0.1 percentile difference on unemployment rate. It's just not enough. So that was a knee-jerk reaction, which has been returned to origin. So there is a chance that they will continue a move off of it, though. So this propulsion gap obviously is being retested now. We have got limit orders triggering in that area. So if you have taken the mean reversions intraday, as I said, watch. This could well be it. Could well continue down from there, but you've made your money. Take it. We'll see what happens next week. But there's plenty of opportunities coming up, and I'll keep testing the strategy and let you know next week what I do with it. But at the moment, I'm thinking of just putting a small account together to give it a multi-month live forward test because I'm happy with all the results so far. Unless I do further testing and find a problem, and I usually do find some kind of problem with it, but conservative forward testing is worth a bash. Good night, Danny. It's 1 a.m. there. Good for you. 1 o'clock. He's time traveler. He's in Saturday. It's still Friday here. I'll be back on Monday. I haven't put up the schedule for next week yet. I'm not here Monday. It's bank holiday. I'm back on Tuesday. So it's bank holiday in the UK on Monday, so I'm not trading Monday. Banks are shut in the UK, so London session be dead. New York session still on, but no trading on Monday for me. I'll be monitoring positions, obviously, but there's no live room. So I'll be back on Tuesday morning at 8 a.m. Because we've got the Aussie rate announcement. That's coming out at 4.35. It's not changing this time round. So we'll have to wait and see what the press conference says. So big volatility on the Aussie. So as I said, my Aussie New Zealand short that I've got on at the moment, it's make or break on Tuesday next week. We'll probably sit there as we are now until next week, unless the market decides it thinks that something's going to happen in that press conference or it gets leaked, in which case we could find a move pre-market on Monday before the open on Tuesday when we get the news. So there's possibility of some movement on the Aussie next week, big movement on the Aussie. Then we've got the pound to look forward to as well next week. Again, we're not changing the rates. The forecast of what the 9 board members think should have happened to interest rates is what's going to drive the market. And then obviously we've got no press conference again, have we? Yes, we have. Yeah, sorry. 12th day, we got the press conference. So we'll wait and see what Bailey says on Thursday. So big events next week. I don't think there'll be big movement, though, because I don't think we're going to get any more information as to when things are going to happen. If we do, we will get some movement. If we don't, we won't. Literally what we have at the moment, isn't it? So, all right. So I'll be back next week, Tuesday, 8 o'clock. I'll put the schedule up sometime over the weekend in Telegram and Discord. And obviously it'll be on the website on the live room page. But other than that, I will enjoy your tips you sent me. Thank you very much. And I will spend those on popcorn tomorrow. So have a good weekend, and I'll be in Telegram and Discord if you need me. Other than that, I'll be back on Tuesday next week. So have a good weekend.